I'll be honest with you. I don't have infinite money.
Yeah.
So there is no world in which I'm writing $150 million of my own capital, shits and giggles.
Right. One after another after another.
Not yet.
Not yet.
I mean, I have an ambition. I have an ambition, like a lot of the people that are, part of the Motley Fool community, to be extremely successful. I have that ambition. I have an ambition to try to compound, $100 billion of wealth, $200 billion of wealth. That's not going to happen if I'm an idiot.
I was wondering, given...
And so, the question... No, sorry, go ahead.
Keep going, sorry. No, keep going, sorry.
I was just going to say that, so what I'm trying to find is a negotiated price which is fair for Vivek and fair for me.
Yeah.
And what I mean by me is not just myself, but it's everybody else that can own that SPAC and can own that future return stream at that price. And I'm not saying that we're always going to get it right. And I'm not saying that sometimes, we may be slightly off on one side or the other. But I am going to tell you generally that I'm putting my money in money good. And, I'm not the best investor in the world, but, the last 10 years, I've compounded my money at 32% net to me on billions of dollars. And now the goal is, can I do that, in the 30s, maybe it's the high 20s on tens of billions of dollars. And if folks want to believe in our diligence and our process, I'm never going to ask anybody to take a risk that I'm not willing to take in the biggest size. And then, we'll just see sort of where the chips fall. But if I didn't have any money, I would be the first one to tell you, you should not believe a goddamn thing I'm saying. Because, then you can just live off of a promote. And, my goal should be to do 500 of these things.
Yeah.
What's going on, everyone? My name is Obi and welcome back to Courtside Financial. If you're new to the channel, make sure you hit that subscribe button so you don't miss out on any videos, and also make sure you hit that like button because it really does go a long way in helping out the channel. Lastly, if you want to be a part of the conversation before it happens here on YouTube, make sure to click the link in the description to join the free Courtside Financial Discord. New promo going on now from February 2nd to March 31st. When you open up your new brokerage account, you'll receive one free stock valued anywhere from $2.50 to $250. And when you make that initial deposit of $100 or more, you'll receive another free stock, and this free stock will be valued anywhere from $8 to $1,600. Lastly, cryptocurrency is now available on WeBull, so you can trade cryptocurrency on the platform with zero commission. So it's currently 7:24 p.m. Eastern Time here in Michigan, and today we're going to be talking about Clover Health, ticker symbol CLOV. It is currently trading at $10.94. It's up 1.39% for the day, and it is down 0.36% in the after hours. For the week here, it is down 9.66%. So I've had my eye on Clover Health long before the Hindenburg Research short seller report came out that attacked them and sent the stock kind of spiraling downward. So I'm going to kind of talk about what Clover Health is, and then I will talk about the research report and what I think about the stock and what I think about the company. So I'm going to use a little bit of material from their investor presentation slides. So in 2019, healthcare spend was $3.65 trillion. Well, I wouldn't say that it's good to see healthcare spend is increasing, but it's good for the business. So Clover's business is essentially a software play and a Medicare insurance business. It's all about better outcomes and driving down costs through the use of technology. So there's a lot of things insufficient in the healthcare space for people over the age of 65. Business value and consumer value are not correlated. When you think about business value in the healthcare space, it's all about keeping prices high and promoting particular drugs. But that's almost never the best thing for consumers or patients. If an elderly patient goes to multiple physicians, they're going to get multiple diagnoses and care plans. So as I mentioned, Clover is here to help physicians produce the best outcomes for the patients and also reduce variability in the decision making of physicians in the healthcare space with their proprietary technology. Medicare is going to be super important in the future, especially as it pertains to costs. And we can think kind of like right now, Biden wants to reduce the age for Medicare from 65 to age 60. So that's obviously going to cost a lot more money. So it's important to optimize cost in that area as well. So Clover wants to provide cheaper alternatives. They have a 41% cheaper alternative to Medicare, and they have a 17% cheaper alternative to their nearest competitor. So for them, it isn't just about those who have private Medicare. CEO Vivek Garipalli actually said that they want to get to the point where they're giving their software away for free to physicians, and then on top of that, they are just generating revenue off the savings that they're making for the government. And now their software is actually called Clover Assistant. It has a 19% engagement rate. So for every 100 visits, a physician is using it about 19 times, which is really good. So they're collecting a lot of data every time the physicians are putting it into this software. It's learning from every encounter and it's constantly improving, and this is how they can help to reduce the variability. So I'll reiterate that Clover is a software company. Software does very well at scale. On top of that, they're a Medicare insurance company. If you know anything about the insurance business, insurance is a very cash-rich business because the consumers are constantly paying for it, whether they're using it frequently or infrequently. So it's trading at around $11 a share. Let's talk about that because its all-time high was about $17.45, I believe. As I mentioned at the beginning of the video, Clover Health was attacked by short seller Hindenburg Research, and there's an ongoing investigation by the SEC right now. Now, there's actually a lot of controversy going on right now because a lot of people were expecting Chamath Palihapitiya to actually respond to what's going on. And the way that I look at it is, hey, there's an ongoing investigation right now. You never know what's going on behind the scenes. So he might not be able to respond right now. And I kind of look at it like that's the way he's playing it. It might just be that his team doesn't want him to speak right now. And that happens a lot of times with a lot of this legal stuff. So Hindenburg Research had several arguments against Clover Health. Clover Health actually responded to all of them. I think the main the main point here was the allegation that there was an ongoing Department of Justice investigation that they failed to disclose to investors or shareholders. So I actually read all of these points. I'm not going to read them all on this video, but I'll link it down below in the description. If you are considering Clover Health, it's in your best interest to actually read their response, read the allegations from Hindenburg Research, and come to your own conclusions. But I will say that I did like a couple responses, so I will go through and I'm going to actually pull those up on screen right now. Clover's mission is to improve every life. We do that by scaling the Clover Assistant platform across physicians to drive a meaningful, positive clinical impact towards as wide a percentage of our membership as possible. We align our incentives for the Clover Assistant by embedding our software platform inside of the business of our Medicare Advantage plan. As we improve outcomes and lower costs, Clover can pass those savings on to consumers, improving the attractiveness of our plans and spurring rapid growth. We ultimately seek to transform healthcare for each and every one of us. Clover welcomes questions about our business as it gives us the opportunity to share our vision and address any skepticism, whether founded or unfounded. As you will see from our detailed point-by-point response, the short seller firm's questions, the alleged report is rife with the ad hominem attacks, sweeping inaccuracies, and gross mischaracterizations. Importantly, the short seller firm did not contact Clover, and we had no knowledge of the short seller report prior to it being made publicly available. In our view, it belies a desperate attempt for publicity while sacrificing any regard for the truth. In addition, we would note that the report's title specifically calls out the involvement of the king of SPACs, quote-unquote, Chamath Palihapitiya, and accuses him of a dearth of diligence. This is, as we will show, is completely untrue, and we suspect that this was done in order to sensationalize what is otherwise a rather underwhelming piece of research. Given the market's latest views on short sellers, we believe that Hindenburg, which takes pains to call out their altruism and saying that they are not short on CLOV stock, is foolhardily seeking to redeem itself by posturing as a white knight of the financial markets. We put together this response as rapidly as possible. We hope you will find it extremely informative. So the main point that I said that I wanted to address here was the quote-unquote ongoing DOJ investigations. So point number one, did Chamath or Clover know about the ongoing DOJ investigation? If so, why was it concealed from investors? Chamath and Clover were fully aware of the DOJ inquiry. To be clear, Clover does not believe it is or has been in violation of any rules or regulations related to the inquiry. We went through both an IPO and de-SPAC due diligence process, and this subject received extensive focus and attention. Consistent with the views of Clover's outside counsel, Social Capital's outside counsel, and independently retained outside counsel of third parties, including IPO Underwriters Counsel, we concluded that the DOJ's request for information was not material and was not required to be specifically disclosed in our SEC filing. How could a DOJ inquiry not be considered material information as heavily regulated organizations participating in the Medicare Advantage? Clover and its peers receive frequent requests for information from regulatory bodies. These are typically confidential. We promptly respond to these requests as and when they come in. As the short-selling firm points out, the DOJ also often reaches out to ex-employees, including by civil investigative demands, as part of their information gathering process. For absolute clarity, Clover Health believes it has made all appropriate disclosures, which were reviewed and vetted by outside counsel to all parties. Clover has not received any civil investigative demands or subpoenas from the Department of Justice. Clover has received a request for information from the Justice Department, to which, as we do with all requests from regulatory bodies, we respond. This was on a voluntary basis. Clover has conducted a detailed review of all matters potentially addressed by the DOJ request for information and has concluded that it is in compliance with all laws and regulations material to its business. Up until the publishing of the short-selling report yesterday morning, Clover was unaware of any other ongoing investigations of the company, its officers, or any companies with which they are affiliated. Following the report yesterday, Clover received notice of an investigation from the SEC. We believe this inquiry is based on the short-selling report issued yesterday morning. So I think that they very thoroughly responded to that, and in here there are, I believe, 12 points. I read them all. I think they very thoroughly responded to everything. And mind you, Hindenburg Research is a short-selling firm that attacked a few of the stocks that I've been in, and that didn't stop me from investing in them. So there's actually 14 points. The last thing that I wanted to talk about out of here is their Net Promoter Score. As you can see from right here, it's extremely high. I'll just read what they said. As you can see, most of our Clover Assistant Survey respondents give us very high ratings. There are a few middle scores, and 3 are, of course, some detractors who give us low scores. When we receive a detractor feedback, we strive to send our product and user research teams to interview these users to find out how we can do better. We're not perfect, but our fast iteration rate, releasing the new Clover Assistant version on average every 3 to 4 weeks, helps us continuously improve our platform. I think I mentioned in this video that a lot of the stuff that they combated Hindenburg Research with was stuff that I actually came across when I was researching Clover Health before the short seller report actually came out. For example, in that interview that I put at the front of this clip, they talked about this, but I can't actually put that full interview out on YouTube, and you can't find it anywhere because I don't want to get copyrighted. It's a premium service that you have to pay for. Point number 13, they said, if Clover's software is so delightful to use, why does Clover have to pay doctors an extra $200 per visit to just use it? We think that this is a big part of the innovation model of Clover and why it's so important that we build this tool internally as a payer. Like they said in that interview that I watched, they said they wanted to start with incumbents. They said that they wanted to build it from the inside out, not the outside in. So the Clover Assistant is a software as a service type enterprise clinical decision tool, but rather than charge physicians to use it like regular software startups, we instead reimburse PCPs to encourage them to use it and recognize the incredibly important role that PCPs play in assessing and taking care of our members and controlling costs. PCPs receive less than 5% of total medical expenses in the US, and we believe that to solve the ballooning healthcare expenses in our country, we need to shift more of our focus, resources, and compensation to primary care doctors. To be clear, the extra $200 per visit is not incremental or just to use quote unquote the Clover Assistant, but represents the overall payment that covers both of the PCP office visit and the use of Clover Assistant. This translates to roughly twice the traditional Medicare fees paid to PCPs for an office visit, more in line with the fees paid to specialists. Most critically, this is a flat fee. We don't pay them more to agree with us or less when they disagree. A lot of the programs effectively do this, and that's what creates moral hazards like upcoding and trying to skimp on care. We pay the flat fee because we want to reward PCPs for great data-driven primary care without creating moral hazards and bad incentives. Now that makes sense to me. When you incentivize people to do the wrong thing, they're going to do the wrong thing. We've seen this happen so many times in business, and that is what Clover is very aware. This sounds like an ethical company to me. They're very aware of that line and creating those moral hazards, and it seems like they're not doing it. That's just how I'm looking at it from my perspective so far. Speaking to the delight point, we measure this in an objective, standard way in the form of Net Promoter Score surveys. We run these surveys within the Clover Assistant for all Clover Assistant users on a quarterly basis to see how we're doing in terms of user satisfaction and delight. We've traditionally received a score between 55 and 63, which we think is excellent, particularly for healthcare. So that was the last point that I wanted to cover there. But keep in mind that the SEC refused to comment. It's been asked multiple times to comment from different places. Even in this article, they refused to comment. And Chamath Palihapitiya refused to comment. You don't know what the legal ramifications could be of him, speaking on a situation when this whole thing is under investigation. So, it's probably not that Chamath doesn't want to comment, but it's probably that, he just can't comment right now, or he's being advised not to comment right now. Generally, retail pays a premium for SPACs, and people are jumping into the company without much information on it. I think their Q4 earnings here will be March 1st. But in my opinion, this one could be a little bit different because the short seller has brought this SPAC down all the way from $17.45 all the way to around $10. Now it's hovering around $11. Chamath says that he believes that there's experimentation too risky to get into a company. You want to wait until they get to product market fit. And then after they get to product market fit, that's when they get to scale, and that's when people start paying crazy valuations for companies. So if you think about the test, he said you want to get in when a company is at product market fit. This would be when Tesla released the Tesla Model 3, and we've seen exponential growth since. So he actually said that he believes that Clover Health at this point is at the early stages of product market fit. And for me personally, giving my own opinion years down the line, why wouldn't everybody want less variability in decision making? Why wouldn't people want cheaper Medicare, especially if there's going to be probably more people on Medicare, and not to get into politics because anything could happen there, but it's definitely a possibility. So I could very well be investing in Clover Health. I've been doing a lot of reading, and I still have a little bit more reading to do on this company. Make sure you hit the subscribe button if you want to stay updated. Make sure you hit the like button. That really does go a long way in helping out the channel. leave me a comment down below. I'll link the free Discord in the description if you want to be a part of the conversation there. And as always, thanks for watching. I'll catch you guys in the next video.